Well, we will get started. First, I'd like to welcome everyone to the animal nutrition breakout session here. I think Michael did a really nice job of kind of setting us up for the discussion regarding inputs on the animal nutrition side. He talked a lot about just, the risk protection, the volatility in the markets, how important is the last 2 to 3 years and even, going forward to make sure we're thinking about our input needs as well in animal nutrition, and how do we manage that risk from an input standpoint and help hedge some of our risk with some of our output sales, whether it's milk or, beef sales or things like that. So, we're seeing a heavy amount of that in animal nutrition. And in just a second here, I'll introduce a couple gentlemen here that will help take us through that a little bit and how that process works in the animal nutrition world and, how we approach that. But, one thing I wanted to mention to the team and to the group here was, we truly look at, from Alcivia standpoint with animal nutrition and commodities and the ingredients, how do we move nutrients? That's really what it comes down to, right? How do we buy the best sources of proteins? How do we compare them with the other opportunities on proteins or fats or fibers or amino acids and move that through our supply chain and through our animals and get the best return for our members and our producers and for our business? So I'm not sure everybody knows, but we do have 3 members at Animal Nutrition at Alcivia that full-time work on nutrient evaluations and formulation. We have a couple members of our team that help with the procurement, the contracting, and the sourcing. So we have the team here to help evaluate and understand what's the best way to look at individual situations and how to help protect some of your risk and what commodities may make sense to look at and secure at what times of the different cycles. And I think if you look at the last 2 years alone, just looking at soybean meal from a protein standpoint, we've seen the highs and lows each of the last 2 years. We've seen anything from low $300 soybean meal in this marketplace to the upper $400 soybean meal. So close to $150 to $200 swing in just the cost of soybean meal in this marketplace. So just that really emphasizes the need for inputs, for procurement, for risk management. And, we have the luxury of working, we've got a great team here, but we have the luxury of working with our partners at DSI, which is Direct Source Ingredients. So, I'm going to be introducing, Steve and Wayne from Direct Source Ingredients. They are a business out of Minnesota that works with our business and some other, cooperatives and feed businesses in Minnesota, Iowa, and Wisconsin. And for our key high volume ingredients, it allows us the opportunity to help put volume with our procurement for 40 plus feed mills together, so that we're in the market out there having an opportunity to look for those opportunities and make sure we're getting the best prices for you as our members and our customers. So with that, guys, I look forward to understanding what you can share with us today about the markets and how that relationship works, and how ultimately that will help our customers and our members that are participating with us here. And with that, I'll introduce Wayne Gould and Steve Armburst. And guys, I'll give it to you.
Thanks, Eric. Appreciate it. Thanks for having us, everyone. We're going to talk a little bit about just markets in general, where things are at. I know Michael shared some stuff on that. And then we're going to go into something that maybe isn't talked about as much, which is kind of the dynamics of trading and how that works. So we'll get right into it here. All right. Eric already introduced us, so actually, hold on one second. There we go. Sorry about that. All right, everyone can see our screen, correct?
Yes.
All right, perfect.
Yes, we're good, Wayne. I can see it.
All right. All right, so what impacts commodity supplies and values? First of all, as Eric mentioned, we're with Direct Source Ingredients. I'll let Steve was kind of the founder of it. He's been here since the start, so I'll let Steve give a little background on what we are and what we do.
Yeah, Direct Source Ingredients is a commodity trading company that's fee-based. What we try to do is turn around what the traditional type of reseller help in trading was, where another company would actually put on a position against the person that they're going to be selling to. try to make as much money as they can and sell it to them. What we are trying to do is do it different. The people will actually hire us, pay us on a fee-based program. We turn around, we buy the ingredients. We try to pool all the different companies that we're trading together, try to pool them all together, and then trade the ingredients, and then all of the billing, the contracting, everything would go back to the client. So that way we're not duplicating things, like the receivables, the money, that whole thing. Jim Dell, interestingly, back when in another life, 22 years ago, was one of the original people that was involved in starting this. So he's very familiar with it and been in it, a long time. And so they came back in the group with Landmark and now Alcivia. We do mainly trade in Minnesota, Wisconsin, a little bit in Iowa. There are about 40 feed mills. There's actually more feed manufacturing locations than that. And we trade all ingredients that are semi-low quantity. If it's part loads, a lot of bag stuff, maybe with the exceptions of things like amino acids, we don't really trade it. So that's in a nutshell, that's what we do.
All right, thanks, Steve. All right, we'll get right into what impacts the price of commodities, how some of the markets work. The first thing to understand is that the global market drives everything. That's the start. Michael talked about that a little bit in his presentation. But when we have things like what's happening in Russia and Ukraine, or what happened with the trade war with China, those things directly impact our prices for both grain and feed at the farm gate. That's where it stems from. That's where the Chicago Board of Trade and other boards of trade come up with their prices and what they do with it. The global market is where global production and global demand matter and where everything starts as far as a price. Then you move down to the domestic market, which is the US market. How much of those products are we keeping at home? Are we keeping the grain here? Are we keeping the soybean meal here? Or are we exporting it more than usual to other places? Same thing in every country. Canada would be a big player in the canola seed export market, which directly impacts anyone that feeds canola meal here. And then we move down to the regional market. With the regional market, this starts to get into a little closer to home, kind of the Midwest, maybe call it. And this is where you really start to see impacts directly to you, what price you're going to pay at the farm. This can be, you have your Chicago Board of Trade price and then a basis. This can be that. This can be what's happening locally on flat price commodities such as distillers, things like that, or regionally. It all impacts it. Believe it or not, a plant that a soybean meal plant that goes down in Nebraska probably impacts your price to a certain extent, even in Wisconsin, because it's also interconnected. It just flows that way. And then you move into the local market, which really starts to impact you and gets into more of the nitty gritty of what's going on directly in your backyard and where you really come up with the prices and where things need to be. And regional and local markets is a lot of what Steve and I do. We're always watching the domestic and global markets because that paints the overall big picture. But the regional and local markets are sometimes harder to get the information about where prices are or what they're doing. And that's what we spend our time doing, is sifting through that information and figuring out where things are at. So along those lines, kind of continuing on with what impacts your price at the farm gate, the local market factors, some things that people may not think about all the time, but definitely impact the price that you're paying, would be plant run rates. An ethanol plant, a soybean meal plant, a canola meal plant, or canola crush plant, any of those plants at different times for different reasons. Maybe it's a problem with their plant that they can't run it at full rate and they have to slow their run rate down. That's just less supply out there for you. A lot of times with ethanol plants, we see issues with margin. maybe the margin's not there to justify them running at full rate. They have to back off their run rates a little bit to make it make sense to keep running. And then the other thing that definitely impacts the price is if there's shutdowns and maintenance. And those are things you're not going to hear about or read about from market wires or anything like that, but they definitely impact the price, especially short-term price movements. Shutdown of a soybean meal plant, if it goes longer than if it's planned, it still impacts it, but maybe not as much. If it's an unplanned maintenance or if a plant doesn't come up like we thought it would, it can have a drastic impact on the local market price. A huge factor in today's world is logistics, and this is something that I'm sure Alcivia helps out, farms a ton with on the logistics side of it. I know they do, but logistics right now, especially truck logistics, have really been kind of a problem for the last year, probably year.
Yeah, year and a half.
Year and a half. Things have freight rates have gone up. Trucks are hard to find. There's less people willing to drive the trucks. We had a lot of truck drivers that were at retirement age or close enough to it that they could make it work, and they just said, I've had enough, I'm not doing it anymore. So trucks right now to move grain, feed ingredients have been a real challenge. You have issues and with vaccine mandates have exacerbated that to a certain extent. Canola meal is a great example of that right now. Canola meal out of Canada usually makes its way into Wisconsin fairly regularly. That right now it's extremely hard to get trucks to cross the border. And then the other part of the logistics side, besides the truck, which is a huge part, but the other side of the logistics rate that you need to think about that impacts your local market that maybe isn't thought about as much is rail logistics and container logistics. Your local plants are most likely, most of them, the vast majority, are exporting some of their product or moving their product to other parts of the country via rail or container ships. Those issues have a direct impact on what price you pay in your local market. Right now, today, in fact, we heard there's some problems with the Union Pacific Railroad and not getting system cars to some of the soybean meal plants. And we've actually seen those plants lower their price by a couple of dollars in the last few days. And that's why, because they can't get the rail cars to send it out on rail, so they need to sell more truck. You have the same thing with ethanol plants sometimes, where maybe they have to sell DDGs cheaper because they can't get them to containers. The other side of it is you could have oil problems, rail logistics on oil, soybean oil, or on ethanol, and plants can't get cars. They have to slow down so they don't plug the plant. So those things matter. The other part of it is demand. Last year in southern Minnesota, we had a few different diseases and hogs go through, and it had a direct impact on the amount of demand for soybean meal out of that area, which lowered the price probably more than anyone really saw coming at the time, because that disease is not something you could predict. But what animals are being fed and what rations are being used to feed those animals can have a huge impact as well on your price. And then the last thing what we're going to talk a little bit more about today is the actual trading of each product and how they trade. Has a big impact, not one that maybe a lot of people would think about or know, but can have a big impact on what price you're paying. So what is a trade? A trade is just an agreement between two people. Someone has a product they want to sell, someone has a product they want to buy. Should be simple and straightforward. We shouldn't have any problems, right? Everyone gets what they want, except the problem comes in with a price that we want to pay. As a buyer, we want to pay as little as we possibly can and make sure we're not paying more to one person than someone else would sell us the same product for. And from a selling standpoint, if you're selling the product, you want to make sure you're selling it and getting as much as you can. They're protecting their business. That's how they need to do it. So there's times where everything is pretty equal from a buying and selling standpoint when neither really has an upper hand and you can feel good about the trade. There's other times as a buyer where you have the upper hand and kind of feel like you can dictate the price you're going to buy, which is fun. We like that. That's our favorite time. But and then on the other side, you have times where you feel kind of backed into a corner. This would go back to, plant shutdowns or things happening unexpectedly and you're not fully covered, or something that you didn't see coming, or didn't pay enough attention to, which we try and avoid. But if that happens, you feel like you're backed into a corner, you really don't have much of a choice. If you're going to manufacture feed and feed animals, you just have to buy the product.
Yeah, and I would say something here about a trade. It's always price, quality, and service. And I have people come to me and they talk about price and they talk about price and they talk about price. But when the loads don't show up because they don't get the service, they're not going to buy there anymore. If the hours that they load or unload don't match, they're not going to buy there. If they get it, the quality, it's a hot, sticky product, they're not going to buy there. So some buyers want to talk about it's all price and not price, quality, service. But traders know it's always price, quality, and service. And traders will ask for a premium on product because they have better loading hours, because you can drive in and out more quickly, because you don't have quality problems. So it's a very basic thing to say, but when you talk about commodities and trading, it's always price, price, price. It's never just price. It's always price, quality, and service. So.
Yep. And that gets into a little bit more of, commodity trading in general and the pillars of it. The first thing you need to trade is market knowledge. What's happening, whether it's global, domestic, regional, local, and then product knowledge, which we're going to get into more on the next slide, but specific products and how they trade. That's a huge thing. Each product trades a little bit differently. Some have similarities, some are completely different. And then relationships, huge thing in trading. If you don't have good relationships, you're going to be in trouble. We'll get into that a little bit more. Then negotiation and execution of the trade.
Yeah, and I would add on that, to what Wayne just said about the relationship. If I would ask people listening to this to think about one thing to help them make money, have better prices, better service, it's a relationship. You have to be somebody's customer. You have to be somebody where the seller thinks, that's my customer, the market's going sideways. What can I do to call them, to protect them, to help them? Because if you're a price buyer and all you do is call 5 or 6 different people and you're not loyal to anybody, with information, with service on your end, if you're not working with somebody, you're nobody's customer. So in markets just like now, when everything goes to crap, nobody's worried about you. Nobody has you in their plans. Nobody's budgeting tons for you. And that's where, companies like Alcivia, whoever you choose to work with, but like Alcivia, they're looking for the relationship. So you don't always have to call them. They see something going on, they're calling you. That's exactly the type of thing that we're looking for when we work with companies like Alcivia. That we're looking out for each other and sharing information, and it's a relationship. It's not a transactional thing, it's a long-term thing. So.
All right, thanks, Steve. On the product side of things, we can talk a little bit about what's going on with each of these products in the current market environment as well. But just to paint a picture a little bit of different ways that these products trade. I'll take soybean meal and canola meal, and maybe Steve will do DDGs, wheat, mids, and corn gluten feed. But soybean meal and canola meal, I've traded for CHS from the plant's perspective, and then I've been a buyer a couple different times. So I've kind of seen both sides of it. So those products on soybean meal, it's trading, a lot of times it trades in clock, what they call clock, which is the crop year. It's October through September. And that trades on a basis usually. You have your Chicago Board of Trade price for soybean meal, and then you have your basis. And what we're looking at is the basis most of the time. The Chicago Board of Trade price, that gets into your domestic and global supply chain. That's harder for us to deal with. Just like we've seen right now as the prices have skyrocketed with the risk premiums that are built into the market. We've seen that on soybean meal. We need to be aware of it. We are aware of it, but we really can't control that. What we can control is, or maybe not control, but what we can pay attention to more and make sure we're aware of and know is what the local market's doing and how that's trading. So we're checking with as many soybean meal plants in an area as we can as we're going to trade a clock contract. And if we don't trade it on a clock basis, a lot of times it would be a month-to-month trade. Soybean meal trades a month-to-month, or sometimes in quarters. And then soybean meal is a product that is pretty readily available. So usually you're not going to have to worry about not being able to get soybean meal. You may have to sit in line longer than you want to get it, but you're not going to have to worry about not getting it. You just might sit in line longer, or you might have to drive to a plant that you don't normally drive to be able to get it, and pay more than you want to. Canola meal, we've seen it. It's been a little different this year. That's another product that typically trades on clock, like soybean meal, or month-to-month or quarters. A lot of times on canola meal, you'll also see October through March trade. Also trades on basis off the soybean meal board. On canola meal this year, we've seen a short crop. We didn't have as much production of canola seed in North Dakota and Canada as we usually do. And canola seed in general is a harder crop. It's not the same as corn or soybeans where it's readily available all the time, and crushers don't have to worry about having, being able to source enough. It's always a problem to source enough canola seed. I know from sitting on the other side of it, you have to watch it, be careful. We've seen that this year. It's been a problem. Basically could not get offers after June of last summer. You basically could not get any offer on canola meal April forward, or if you could, it was very expensive and very slim to get. We are seeing that loosen up a little bit. Currently, Australia just posted record production for canola seed. That'll help the global market, which will in turn come down to our market. We've also had plants that have the capability of switching away from canola seed to crush something else, such as soybeans, switch to crushing those instead, which is helping to ration some of the canola seed. So I do think, moving forward this summer, we're going to see canola meal prices stay higher, but I don't think it's going to be a matter of not being able to get the product, which was the case, which was what we were seeing, 3 or 4 months ago. That was a real possibility, but it is starting to look a little bit better now. So then I'll turn it over to Steve.
All right, distillers, everybody knows this, but the important thing to remember about distillers is distillers aren't distillers. Every product is different. Every product has a different color, has a different grind. We cannot ship distillers to anybody we want to and treat distillers as a commodity like corn. So you have to know that. The other thing with distillers, the problems I have in trading, when somebody's used to buying from a certain plant and that plant goes down, it's like, well, what are we going to do? Where can we go? Well, you got a couple of problems if you haven't already thought about this and planned on it. One, you're going to have credit issues because you're going to have a different manufacturer is going to have you fill out a credit app, then you're not going to be able to get the product in a timely manner. But more important than that, the quality aspect of it, people are picky, I guess, relative to what they want on quality control. Distillers aren't distillers. So you have to have planned ahead, tried several different other plants, distillers, because we need to know at what you might call the last minute if a plant breaks down so we can do this. People like Alcivia, they do buy from other plants. They do have a process for quality control, but everybody's got to do that because you can't be doing this at the last minute and get the effective price. Or even if another plant just is way cheaper for reasons like Wayne was talking about, rail cars don't show up, we're going to plug the plant, we'll drop the price $10. You can't take advantage of it if you're not ready for that. The other thing about distillers, just in general, Wayne's talking about booking soybean meal forward for a year. For the most part, you can't do that in distillers at all. Maybe you can get some people to offer you for 3 months. Maybe they don't really want to do it. It's very much a week-to-week product. Maybe go out a month. But when you want a distiller's offer and you say, I want to get it for 6 months, and it's a market like this, they're not even going to talk to you. They don't know what's going to do. They don't know what their corn's going to cost them. They're not going to let you transfer the risk to them of what that corn's going to cost. So they're going to be everything in the spot market. So that's, kind of a nutshell of distillers. Wheat mids is a funny market. It is a product that is kind of finite. You actually can almost run out of wheat mids at any particular week or any point in time. Obviously, it's a byproduct of flour milling. Wheat mids wants to trade on an equation to say 80% of corn, something like that. And it all depends on how you view the nutrition on it. But the truth is the price on wheat mids, while they have a seasonal pattern, based on pasture availability or lack thereof, while they do have a seasonal pattern, on wheat mids, it's all about runtime. For example, in a seasonal pattern, your cheapest products are in the summer, and then you get into creep feed July, August, Sept. And then you get to holiday time periods with Thanksgiving and Christmas, and then prices keep moving up. And then you get into January, you start to see all of that business drop off, and then the market slides all the way down until the summertime. But at any point in time, if Ardent, who's the biggest flour miller in our market, if they're not having run times on the weekends, for example, over the holidays, Christmas, Thanksgiving, they'll have multiple plants shut down at the same time. And all of a sudden you'll see prices up $20 overnight, literally from morning to afternoon. That's why it's all about run times. So when you're buying wheat mids, you really have to be constantly watching the market. You have to be in the market in time periods when the run times are good. So the sellers, the flour millers, feel comfortable, even though that could change in the next phone call. And you have to buy kind of when they're ready to sell and look for those opportunities. Still follow the seasonal patterns, but look for those opportunities. On the corn gluten feed, corn gluten pellets, a lot of that for our market comes out of ADM at Cedar Rapids or Clinton. You can come out of Muscatine with the loose feed product. You can come out of Chicago, but a lot of it comes out of the Cedar Rapids market. ADM basically doesn't care about anything relative to customer service. They break down all the time. There's truck lines all the time. They'll give you offers. They won't give you offers, just like right now. They had offers through September. Now they won't give you any offers at all, other than, you're going to pick it up in the next week or two. Product quality, if you don't like the product quality, meaning the pellets are broke up, don't buy it. They don't care. They sell their product. They move their product. It's a real pain product because of all the logistical problems with trucks, problems with loading. Trucks don't want to go there. We trade a lot of it, but here it is. You get what you get. You take it when you get it. And if that's something that you're not comfortable with, where something like soybean meal or mineral products like phosphate or calcium to get delivered at, right when you want them, you don't want to buy corn gluten pellets. Go ahead. What's next?
All right. Moving on with our trading pillars of trading, and we're kind of running short on time a little bit, I think, so we'll try and speed it up a little bit. But the relationship piece is a huge thing. We need to make sure we talk about that. When you're getting your price at the farm and you're working with Alcivia to get that price, when we're trading, trying to buy as well as we can, it matters a ton what our relationship is with the suppliers that we're working with. And it matters to them that we're easy to do business with, that we know what we're talking about, that we share information with them. People trade with people. That's just what happens. I've seen it from both sides. When you're at the other side as a processor, you really don't care about a specific customer. Well, I shouldn't say that. I mean, most people do, but there's people that just don't. You don't need each customer. And in southern Minnesota alone, with the 4 soybean meal processors, they make 15,000 truckloads of soybean meal a month. They have to move 15,000. If they lose an individual customer that takes 4 loads a month, it doesn't move the needle for them. Even us at DSI, where we have more volume and we work with all these feed mills, we move the needle a little bit, but they'd survive without us. So we have to make sure that we're keeping good relationships, working with these people, building these relationships all the time. And Steve and I spend a ton of time doing that. It's a huge thing. It's my favorite thing about it, actually, because you meet some good people and good friends in this business doing it. So there's give and take in all relationships. We try and remember that all the time and get along with people. Other side of it is it's not always fair. As I mentioned, suppliers don't really care if you buy their products. They'll find someone else to do it. And even if you have a great relationship with someone, you know, I've got guys that I hang out with outside of work all the time that are traders for other companies. But if they, you know, there's times where they're doing what they think is right for their business and they don't care that it may not be fair to me. It's not always fair, just like a lot of other things in life, but they don't have to sell you product. They don't have to give you any number that you think it should be. They do what they need to do for their business, and that's the way it is. But having the good relationships can help you mitigate some of that. So anything to add on?
Yeah, you know, I think the whole relationship thing, it's not always fair. It's not even, it's not all of this stuff. But if you have the right relationship, whether it's with the producer or whether it's with the supplier, in the big picture, they're going to want to try to be fair with you. Doesn't always work out that way, but they're going to want to try to be fair. And whenever you're, you know, you have a mutual interest with these suppliers. They have something that they need to sell and it's something you need to buy. So it's always in both of your interests to work together. They don't have an interest to lie or to be tricky or sneaky, but they still got to look out for their business. So if you try to be fair, doesn't always happen. If you always try to be fair, or they can at least see your logic, you can get a lot of stuff done.
All right, the next thing that happens in a trade is the negotiation, and this is where we pull everything together from the global market, domestic market, all of our knowledge. And, you know, for our case as a buyer, we're going to go to the suppliers and we're going to state our case for why the price should be lower than what they think it should be. And then they're going to try and go back on the other side and state their case for why it should be where they're saying or where they want it to be. And then, you know, if you can state your case, listen to the other side, come to an agreement, then you're done. If you can't, you just tell them that they can't handle the truth and hang up the phone and walk away. No, not really. That would ruin the relationships. But you know, there's times where you're just not going to be able to trade with them, and they know that, and you know what. The important thing is you keep the relationship good by having the discussion and moving on. You know, both sides happy. You know what it is. We'll tell them, you know, okay, well, we're going to have to go buy it from someone else because we can get a better number. And sometimes they're okay with that because they don't need to sell and someone else does. So that's the negotiation piece. Then you move to execution. That's a piece that gets forgotten a lot of times. This is a piece where Alcivia can help you as well, because they're kind of shielding you from some of these things maybe. But if you trade something, the suppliers expect you to pick it up or take delivery of that product when you traded it. If you don't do it, they do remember, and it will affect the price that you get the next time you try and trade with them. There's no question about it. They know who executes on trades and who doesn't. They don't care if it's a good trade for them at the time. If it's not going to execute or get picked up, that changes their position. It changes everything for their planning. So you have to execute on it. when you work with a company like Alcivia, you know, and the volume that they move, they can sometimes move a load to somewhere else and maybe help you out and move that way. If you're trying to work directly through a supplier, that's not going to happen. They will make you pick it up, cancel it, or buy out of the contract, if that's the case.
Yeah, and I'd say something about that. You know, again, Alcivia or whoever you're choosing to work with, producers, I feel, don't fully appreciate all the value that someone like an Alcivia brings. Because what Wayne was talking about, I mean, if you buy something for March and now it's May and you haven't picked it up, you know, the Alcivia in this example, for example, will maybe let you drag loads and work it and filter it through their position. But the processor's not going to. They're going to come back and make you pick up those loads. Or when you're wanting to buy soybean meal and you want to get 5 loads a month over a 12-month time period, and they're going to give you some kind of an average price. Processor doesn't do that. They're going to ask you what months you want it. You're going to have to put it in those months, and you're going to have to pick it up in those months. Or if you have another situation where you have a product quality problem, but there's trade rules about product quality problems and what you can and can't do and what you can reject and what you can't reject. And Alcivia has to follow those trade rules. Well, it comes to the producer, they're upset. Alcivia sits there and makes a settlement with them, and they eat it. They eat the whole thing. So there's a lot of value and protection that you get protected from. And the way I really see this, with some of these people that raise hogs and they want to build a feed mill, and they think, well, I'm going to save all this money, build the feed mill, cut out the guy that's making a grind and mix for me. That's great. But all of a sudden they get their eyes open when they find out all these little things which add up to big dollars that they're protected from. So those people there, they provide a real good service for you.
One point. Kind of along those same lines, just some takeaways from our conversation. Trading has a big impact on the prices that you pay. Having the relationships is what helps you get better prices. Knowing the trading rules and practices, Alcivia does those things for you. They know that they have the knowledge of it, and working through us, we try and help with that too, and make sure they know and make sure we're keeping the relationships good to help get you the better price at the farm. Yeah, that's about it. Any questions or comments? Feel free to ask.
Hey guys, maybe I just wanted to maybe summarize while people are thinking about their questions. But if you look at the last few years as we've been working together, I feel like we've done a very good job of helping be in front of the markets, right? For both the cooperative as well as for our members. We've taken a very proactive approach, and most of our producers have been very pleased with how we've been in front of that market, so they can help cover some risk management, help maximize some margins. And I guess one question I would ask of you guys is, over the next 6 months, the March to Sept timeframe, or I know a lot of people are even starting to look at 2023. What are a couple of things in the market from a strategy standpoint that should be on our radar that, we always talk about our strategy going to the market with our members and producers. What are a couple of things that are on our radars of what we're thinking about that from a protein standpoint specifically, probably?
Yeah, I mean, I think one thing right now to be aware of, and Michael touched on it too in his presentation, but with Russia and Ukraine, it's hard to know what's going to happen there. We could go a million different directions. So from a overall commodity price standpoint, big global picture, board of trade price, it's the billion-dollar question right now. It's a huge question, and it's hard to know. What we need to do is kind of make sure we're staying even keel with the news that comes out and watching it and managing our risk as much as we possibly can, because it's going to be volatile markets for the next however long this lasts, at least in probably the next 6 months. So through the rest of the summer, we're going to see volatility on the protein side of things, because that war is going to impact it. If more countries get involved, it's going to impact it. But if it ends tomorrow, we're going to take all that risk premium out of the market, and you don't want to be stuck paying huge prices either. So just monitoring that's really the biggest thing we can do right now. I wish I could tell you exactly what to do. But when geopolitical tensions are going on, it gets a lot harder. The biggest thing is just making sure you're managing your risk. If the price is good enough that you can make a margin, you know, and not lose money, that's something you need to be looking at when the products get there. As far as in general, you know, on soybean meal, we still have soy oil that is very valuable right now. It's helping soybean meal crushers or soy crushers in general. The run rates shouldn't be an issue at all for them. Soybean meal prices, basis wise, shouldn't get a lot more expensive anytime soon. The risk is on soybeans and how much is being exported or not exported on the board. But meal prices, basis wise in general, the cash portion of it, we should have opportunities to buy. We've actually seen that since the Russia invasion. We've actually seen meal basis weaken up a little bit, which it's not directly correlated at all. But that's just how good the margin is for those suppliers. They're going to run it. There's going to be product, you know, and it's just a matter of watching it and taking advantage of it. Right now, for new crop for next year, for 2023, you're seeing prices that are $20 a ton higher than what they were just on a basis side for next year. That's really not that attractive at the current moment. I mean, they have and it's early for that to trade too, but they have that $20 higher. They have the same situation they did a year ago where they have great margins. It's not a question of margin for them at all. And then on DDGs, kind of the same thing. Canola meal, kind of the same thing. The protein markets in general are really it's gonna matter what happens with this Russia-Ukraine tensions and where things go from there. And when the dust settles from it, really. Anything to add, Steve, as far as that?
We're in an unknowable situation for the future. We all know that. To me, we pull at our horns, trade more nearby, look for the dips, but you got to be in the market every day to see the dips. If you're just looking at the market once a month or once a week, you're not going to get it done. And then if you can take a margin, you know, have a crush margin, a livestock margin, take it, just take it. You know, it's all high risk. It's unknowable. Everybody can say whatever they want to say. It's unknowable.
Yeah, I think that's good advice, right? Keep short focused if you're not currently protected, and let's watch for those basis opportunities and where those situate themselves. And, you know, we've had multiple producers here in the last couple of weeks that have locked in some 2023 proteins, but there are also producers that are doing a good job of seeing the output side on the milk market and hedging that against and making sure they're locking in the profit. So there's opportunities out there. We all just need to keep having dialogues back and forth for what works individually for each producer and talk through those situations. Are there any other questions? You guys may get off easy today.
All right.
I did have to sit in this room for a half hour.
I think we're pushing 45 minutes. Yeah, sorry, we got a little long.
Well, we do appreciate you guys being on, and I'm not seeing any other questions, but I just want to reinforce what they said. You know, what Wayne and Steve said, you know, we're here to help balance those relationships and be in the markets every day for you as our members and producers, you know, to try and help find the right opportunities based off of your strategic plan forward. So don't ever be afraid to reach out and talk to us about those. And, you know, we do appreciate everything that Wayne and Steve do for our business and help our members with. So thank you guys for that. And with that, I guess we can wrap up.
All right.
Sounds good. If there's, feel free to send them to Eric or whoever and get them to us, and we can try and answer them too if you didn't feel comfortable asking them on here. So thanks for having us.
Yep. Thank you.
Yep. Thank you guys.